Hello, my name is Jalen West, and I'm the Senior Marketing Manager here at PPR Capital Management. I want to welcome you to another update from the PPR team here. Today, I have the pleasure of sitting down with Taylor Nelson, our Director of NPL Assets. Today, we want to take some time to walk through our Q2 performance, securitizations, overall portfolio performance, and what we have to look forward to in the second half of the year. To kick this off, Taylor, I want to start with talking about our Q2 acquisitions. So in Q2, we acquired over 350 assets across 44 states, with a total representing a total principal balance of just over $61 million. Can you talk about what contributed to this level of activity in the GSC sale that we did this quarter?
Sure. So, like you mentioned, Jalen, about 90-ish% of those transactions came from one large GSC purchase directly from a GSC. Participated in their national public auction there, was the successful winner. We really like getting assets directly from the kind of top of the food chain there, from the GSCs, just for a couple reasons. One is tend to have a little bit higher quality underwriting standards at time of origination, a little bit higher quality borrowers, very clean collateral, and we just feel that the loss mitigation is a little bit easier just because there might have been minimal borrower outreach, or the government's a little less flexible of what they can offer borrowers. So, like you said, over 60 million purchased in Q2, a little bit lower than Q1. I think it brings our total year to date to close to 290 million acquisitions. But just kind of in that cycle of, it was a large Q1, so need to deploy a lot of our capital, so need to raise more capital, get the capital stack back up. So it's kind of a natural trend of large quarter and then a little bit smaller one after. But really happy about the one we did get in.
And I want to rewind a little bit there just to cut through some of the jargon. What exactly is a GSC, and how do they play a role in the broader mortgage industry?
Sure. So your GSCs would be your Fannie Mae's and your Freddie Macs of the world. So they are a huge part of the broader mortgage industry and the mortgage-backed security industry, which is a word we kind of play in as well. So when we get loans from them, basically it's the first time they're going into the secondary market, if you will, right? So they were probably originated and then, securitized or bought by Fannie or Freddie, and have been there since then. And now they've since gone non-performing, and that's when the GSCs will look to liquidate them off their balance sheet into the secondary mortgage market, which is where we come into play.
Mm-hmm. It sounds like the loans have touched less hands, so the paper's just cleaner overall.
Exactly, yeah. That's it. Yeah.
All right, great. And then Q2, we did a securitization. This one's a little unique, though, because we collapsed the prior securitization, repackaged those assets, and went to securitization again. Can you talk about that strategy and how that plays into our return profile?
Sure. So we had a tranche of assets that we securitized back in January of 2024, and a other tranche that was just on our warehouse line of credit. And what we decided to do was collapse or redeem the securitization from Q1 of 2024, pay all those bondholders back, and then package that portfolio up with this new portfolio that was on repo and go back to securitization. And what that did was it lowered the cost of financing on the previously securitized portfolio by close to a point. And then it gave us a higher attachment or higher advance rate on the repo assets. So doing that allowed us to achieve a higher levered return on both tranches, which was a great outcome.
Yeah, and it sounds like it's just a good way of just managing the leverage that's in the fund.
That's right. Yeah. Managing our financing, and trying to get the lowest cost of finances available.
And in April of this year, we also did a reperforming loan sale, represented about $55 million of principal balance. In addition to that, we sold another 166 loans that totaled to 114 million of total dispositions.
Yeah.
Can you talk a little bit about the composition of those loans and what you may have seen in the market, maybe speaking to broader trends?
Sure. So like you mentioned, we did one bulk loan sale, about 55 million, to a pretty familiar counterparty that we've sold a couple of other loan sales to. Still seeing really good pricing execution, selling those at relatively low yields. And that's just kind of a part of our normal course of business. We're going to look to sell 50 to 100 million worth of reperformers, about every quarter or so. But like you said, on top of that, we had another 160 or so loans disposition, just as natural portfolio runoff from full payoffs, or the borrower will refinance and get another mortgage and fully pay us off, or sell their house, or foreclosures. So I think of the 160, which is a pretty much normal quarterly average of portfolio runoff. It was about 60% payoffs and 40% foreclosures. So when you look at the quarter as a whole, you had the entire about 120-ish, 110 million of dispositions and resolutions. About half of that being the RPL sale, 20% being foreclosures, and the other 25 to 30% being those organic payoffs.
And those ratios seem like they fall in line with historical ratios across the fund.
Yes.
So
Yep.
that's nothing out of the ordinary there. Now, when we ended the quarter, we ended it with just over 2,800 of assets in the fund. Can you talk about how those assets are performing? Are we seeing any resolution trends, any borrower trends there?
Sure. So Q2, like you said, there's about 160, and we usually fall about 100 to 200 assets naturally resolve or dispose in a quarter, like we just said. But on top of that, overall the portfolio is progressing. But it's really asset level when you're talking about asset performance, and that's what we do on a day to day. Is really work from a bottom up approach, looking at the individual loans, making sure individual loans are hitting their foreclosure milestones, if that's what we're doing, making sure we're reaching out to the borrowers, keeping loss mitt progressing if we do have borrower contacted, things like that. So overall portfolio is trending the right way. But we were talking about 2,800 loans. It's really drilling down to each individual loan, working from the bottom up, and that's what we do on a day-to-day basis.
Mm-hmm. It sounds like it's really about just making sure every loan stays on track, and those efforts kind of compound across the portfolio.
That's exactly right. Yep.
That's great. And I know when we were talking prior to this, when we were prepping for this, you mentioned there's about 1.1 billion of assets in the pipeline looking forward for July. We're prepping for another securitization. What can investors look forward to in the second half of 2025?
Sure. So, like you said, July should be a big, bidding quarter or bidding month for us, and then we expect, some more sales at the end of Q3. We already know of two GSC sales that are happening or auctions that will happen in July. So Q3 will be very heavy on the bidding and due diligence side of things, and I expect later half of Q3 or early Q4, you'll see a uptick in actually buying and closing on those loans. And really, to your point on securitizations, we're gonna let determine what we buy in the next 1 to 2 to 3 months, really drive that securitization strategy. So if we have a big July, we'll look to securitize those assets probably a little bit sooner. If we kind of backload our acquisitions closer to Q3, Q4, we'll probably look to do a securitization later in the year. So really letting our acquisition trend or pacing determine our financing strategy there.
Mm-hmm. It sounds like you're just considering all the factors and making sure the portfolio kind of stays on track.
That's
there.
right. Yep.
Well, thank you, Taylor. I appreciate this. I think this is a great overview. Q2 has been extremely active for our fund. If you want to learn more about PPR and what we all have going on, feel free to subscribe to our bi-weekly newsletter or reach out to our investor relations team. Thank you.
Thanks.